If you received a 1099 interest, or also known as a 1099 INT form in the mail, you might be wondering, what is this? Why did you get it? And do you owe taxes on it? This is one of the most common IRS tax forms, but a lot of people don't understand how it works, and especially if it's your first time receiving one. In this video, I'm going to break down what a 1099 interest form is, why you got it, and how it affects your taxes. And I'll also cover how to report it correctly and avoid some common mistakes that could get you in trouble with the IRS. And a quick disclaimer, I'm not a tax professional, guys, but I've been in small business for years and years and love shedding some experiences on this stuff. So let's jump in. What is a 1099 interest form? It is a tax document that reports interest income you earn throughout the year. Banks, credit unions, brokerage firms, and other financial institutions are required to send this form if they paid you at least $10 in interest during the year. These are some of the most common reasons you got one of the 1099 INT forms. So a savings account or checking accounts that earned interest, a certification of deposit, or also known as CDs with interest payments. A couple more reasons would be bonds or treasury securities that paid you interest, or lending money to others and earning interest on the loans. Maybe tax refunds in some cases. Even if you didn't physically receive this money in cash, the IRS still considers it taxable income, so you need to report it. So how does this form affect our taxes? Since interest income counts as taxable income, it must be reported on your tax return. But how much you owe depends on your total income in tax bracket. It's important to know that for most people, interest income is taxed at your ordinary income tax rate. So if you're in the 22% tax bracket, your interest earnings will also be taxed at 22%. For higher earners, if your total investment income exceeds $200,000 as a single filer, you may also owe an extra 3.8% net investment income tax. Some states also tax interest income, while others like Florida, Texas, Nevada, they have no state income tax. And a little pro tip here, if you're earning interest from multiple sources, it helps to track your financial income year round. I personally use a tool called QuickBooks. It's really easy to just plug into my business checking account and it helps track all the expenses, payroll, etc., etc. Guys, it's a complete life changer for me. I'll throw my affiliate link in the description if you're interested. Now let's talk about how to report the 1099 interest form on your taxes. So first, find the total interest earned. Look at box 1 of your 1099 interest form for your total taxable interest income. Step number 2, report it on your tax return. Enter the amount from box 1 on Schedule B, which is Form 1040. That is, if you earned over $1,500 in interest income. If it's less than that, you may be able to report it directly on Form 1040, line 2B. Step number 3, check for any tax-exempt interest. If your interest income is from municipal bonds, it may be tax-free at the federal level. Step 4, file your taxes correctly. I personally use H&R Block to help me with all this, especially when 1099 forms are involved, because it kind of helps me make sure everything is in order. Again, the link will be in the description. Next, I'd like to go over some common mistakes to avoid with a 1099 interest form. The first one is just forgetting to report interest income altogether. The IRS does not like this, and it is the biggest mistake you could do. Second, not checking for errors. Banks sometimes report incorrect numbers, so always verify all the total numbers. The next one is assuming small amounts don't matter. Even if you earned $10 in interest, you're still required to report it on your tax form. And another huge one is just forgetting about state taxes. Seems pretty obvious, but I always like to throw that in there. So some final thoughts on this, because it is kind of a lot, right? If you received a 1099 interest form, do not ignore it. It just means a financial institution reported your interest income to the IRS, and now you need to report it on your tax return. Some key things to remember: interest income is taxable and must be reported. Your tax rate depends on your total income bracket, and failing to report it can lead to IRS penalties or even audits. Again, guys, if you have multiple income sources or like businesses that are bringing this in, I highly advise QuickBooks to manage all your finances. If you have a business checking account, it just links up to it. And if you have a checking card, it's so easy to just run your expenses and everything through that account. And if you guys have any further questions, don't hesitate to hit me up in the comments. And guys, before you go, you need to check out this next video. I'm confident that you're going to love it.